I want to welcome you to this Options Trading for Beginners series. This video is about put options explained for beginners. If you're new to put options, don't worry, you've come to the right place. I'm going to break this down for you nice and easy. I will explain to you what are put options, how you can make a lot of money with put options, and how you can lose a lot of money with put options as well. So let's start from scratch. What is a put option? A put option is a contract between a buyer and a seller. So let's pretend that I'm the seller and you are the buyer. So in other words, I am selling the put option and you are buying the put option. Now let's choose a stock. Dave & Buster's stock, ticker symbol is PLAY, play. Dave & Buster's is currently trading at $44.96, but to make it easier, let's just say it's $45 a share. And I want to make a deal with you. What if I told you within the next month, I will give you the option to sell Dave & Buster's stock to me for $40 and I'll buy it from you. So you don't have to sell it to me, but you can if you want to. That is your option. But I'm not going to give you that option for free. If you want that option, you'll have to pay me 45 cents. And let's just say that you agree, you'll pay me 45 cents to have that option. So ultimately, you bought the Dave & Buster's $40 put option with a 1-month expiry for 45 cents. So it sounds fancy, but it's very straightforward. But you have to remember that right now, Dave & Buster's is at $45 a share. So you're not going to go buy it for 45 and then sell it to me for 40, because if you did that, then you would lose money. You would lose $5 a share, so you wouldn't do that. So the question is, how do you make money? So you want Dave & Buster's stock to crash within the next month. If Dave & Buster's stock falls to, let's just say $30 a share, then you would be so happy. Because if Dave & Buster's falls to 30 a share, then you can buy Dave & Buster's on the open market for 30, and then you could immediately sell it to me for 40. And then you would make a gain of $10 a share. And you have to remember that you paid 45 cents to have this option. Therefore, your true profit would be $9.55. So that would be an awesome rate of return, because with 45 cents, you made $9.55. And I want you to know that this is a real life example. Those are real numbers. Take a look for yourself. This is the options chain for Dave & Buster's, ticker symbol PLAY. We go about 1 month out, we open that up, and you get this. So don't be intimidated. This is very easy to read. So we're looking at the $40 put option that's selling for 45 cents. You refer to the ask at 45 cents because if you're trying to buy the put option, the seller is asking for 45 cents. So you look at the ask. Now let me give you a different example to show you how you lose money. So let's just say that you bought the same put option. You bought the $40 put option expiring in 1 month. If Dave & Buster's does not fall below $40 in a month, then your contract will be worthless. So to demonstrate, Dave & Buster's is at $45 a share. Let's just say that the stock falls to 41. Then in this situation, your contract would be worthless. Because why would you exercise your option to sell it to me for 40 when you can sell it on the open market for 41? So if the stock does not fall below your strike price before the expiration, then you wasted your money on buying the put option. So in this example, you paid 45 cents for nothing and wasted your money. Now, I need to tell you about the duration of the contract, and I'll teach it to you like this. I'm going to give you 2 offers, and you tell me which one sounds better to you. Offer number 1, you can sell Dave & Buster's stock to me at $40 within the next month. Offer number 2, you can sell Dave & Buster's stock to me at $40 within the next 5 months. So you tell me which offer sounds better to you. And it's going to be offer number 2. Offer number 2 sounds better because you have more time for Dave & Buster's stock to fall below 40. However, this favorable condition, it's taken into consideration, and I'll show you. So take a look for yourself. Here are the options contracts on Dave & Buster's. For the put option 1 month out, the $40 put option is selling for 45 cents. Now, I want to show you the same $40 put option, but 5 months out. So we open that up and we see this. The same $40 put option is selling for $2.40, which is a big difference compared to 45 cents. So regarding the duration, the more time on the contract, the more valuable the contract is, so the more expensive it is. Time equals money. So you can check the same $40 put option that expires in a week, and you're going to see that the contract will be cheaper. You can check the same $40 put option that expires a year and a half from now, and that will be much more expensive. Now, I want to tell you about the strike price. I'm going to give you 2 offers again, and you tell me which one sounds better to you. Offer number 1. Within the next month, you can sell me your Dave & Buster's stock for $40. Offer number 2. Within the next month, you can sell me your Dave & Buster's stock for $45. So which offer sounds better to you? So in this situation, of course, offer number 2 is going to be better for you because you would rather have the option to sell me Dave & Buster's stock at a higher price. However, this is also taken into consideration, so take a look for yourself. This is the put option 1 month out. The $40 put option is selling for 45 cents. The $45 put option is selling for $1.90. The higher the strike price, the more valuable the put option is. So compare that to the $35 put option, which is selling for 15 cents. Therefore, a higher strike price is more expensive and a lower strike price is less expensive. Now, I want to remind you that with options, you're dealing with 100 share increments. So if you buy the Dave & Buster's $40 put option for 45 cents, then you are buying the option to sell 100 shares of Dave & Buster's at $40 a share. And that put option will cost you $45 because that put option costs 45 cents a share multiplied by 100 shares equals $45. So if you want to buy the Dave & Buster's $40 put option expiring 1 month out for 45 cents, this is how you do it. The stock symbol for Dave & Buster's is PLAY. Buy to open because you're buying a put. You're buying one contract. You choose the expiration dates. You choose the strike price, and you're buying a put. The price of the contract is 45 cents. But remember, you're dealing with 100 share increments, so it costs $45 to buy the put option. Now, if you want to buy 10 put options, you would just change the number of contracts to 10. And that would come out to $450 in total. That's because each contract costs $45 and you're buying 10 of them. Last thing I want to tell you is this. Let's say that you buy the Dave & Buster's $40 put option and the stock falls to 30. You don't literally have to go out and buy 100 shares at 30 and then use your put option to sell your 100 shares at 40. You can just sell the put option itself as if you were selling a stock. And this is what it would look like. Sell to close. If Dave & Buster's falls to 30 a share, the $40 put option would trade for around $10. So you would type in the price that you want for the put option, no different than selling a stock, and you would make $1,000 per put option. That's because you make $10 a share multiplied by 100 shares, which equals $1,000. And remember, you bought the put option for 45 cents. So the put option cost you $45. And now you can sell it for $1,000. So you probably realize 2 things. Number 1, if things work out well, then you can make a lot of money. But number 2, if the stock price doesn't cooperate with you in your given time, then you lose. Now, this is very important. What I showed you is the most basic way to utilize a put option. But this is not the only purpose of a put option. In upcoming videos, I'm going to teach you how to use put options to hedge, which is a way to protect your investments. I'm also going to teach you how to make a steady stream of income with put options. They're called cash secured puts. So there's a variety of ways to use put options responsibly, which I will teach you. So please subscribe, and I encourage you to check out our investing website. I'm going to leave a link for you down below. Thank you so much. I appreciate the support, and I wish you a very nice day. Take care.